In my opinion, this is still a company that is priced to go out of business. And that's why, all right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about a Bitcoin miner I have not talked about before. They put out their second quarter results yesterday. Their stock is absolutely tanking. There was a lot of information in there that was disastrous. They had to give back most of their Bitcoin mining machines. Yet, I am buying this stock. So I want to go through it today and tell you why that is. So the stock that I'm talking about is Stronghold, stock ticker SDIG. So they are a Bitcoin miner and an energy company. We talk about Bitcoin and the Bitcoin miners all the time on this channel. So if that's content that you're interested in, please subscribe to the channel and hit the notification bell. Also, if everybody could please smash the like button, it helps this video out and it helps this channel out. It helps this video get to so many more people, so I really appreciate it. I want to thank everybody for your help recently because we have been getting a lot of likes and comments, and that has really helped the channel. So, with that said, let's get to Stronghold. Okay, right now we're early in the trading day, and Stronghold is down about 18%. It was down about 11% yesterday, so it did just have a big run up. All the Bitcoin miners just ran way up from their lows. We're going to look at the charts later, and you're going to see this company is still down monumentally. It is still being priced like it's going out of business. I believe at this point it's down the most out of all the Bitcoin miners. Okay, so this is now approximately a $50 million market cap stock. I want to take a look at what they put out yesterday, what their report was, and it was very dramatic. This is one of the biggest overhauls to a company that I have ever seen. However, I will tell you, I have done only one video on this company, lifetime to date on this channel, and in that video, I basically said that based on what's happening and based on their balance sheet and based on their first quarter results, it looks to me like there's a very high risk that they are going to go out of business. So they were being priced accordingly, and that made sense to me. However, with the changes that they just made, I think their risk profile has changed. So although this seems like an awful report, I'm going to tell you why I think in the long run, this was actually what needed to happen, and I think this is a step in the right direction. Okay, so before I get into this, I really haven't gone in depth into what these guys do, and I'm not going to go in depth either, but I just want to show you this picture from their website. This is a before and after. That is all coal refuse. So that has been building up for the last 100+ years in the state of Pennsylvania. Basically, you can see they are taking all of this coal refuse. They're turning massive areas of toxicity back into green land. So this is a very cool concept. I don't know another company that's doing this, and I'm going to show you the scale of what there is to do here. There's over 220 million tons of coal refuse that needs to be cleaned up. So there's over 8,500 acres that look like this before picture. And the thing about these things is there's 840 piles of them, and they're very, very toxic, and they spontaneously combust, so they're continuously on fire, burning, and sending more toxins into the environment. So right now they're saying there's 840 piles, 92 of them are currently on fire. This was dated back on December of 2020. You can see they say our Bitcoin mining operations are powered through the reclamation of coal refuse sites across Pennsylvania. We remove coal refuse from piles and burn it in an emissions-controlled manner at our wholly owned generation facilities. So they own their own energy facilities. Coal refuse is classified by Pennsylvania as a Tier 2 alternative energy resource, same as large-scale hydropower. And they receive both coal refuse energy and reclamation tax credits and Pennsylvania Tier 2 alternative credits to incentivize reclamation. So you can see this is a very environmentally friendly, very green thing that they're doing. So, of course, that's just one piece of the puzzle, but no, I don't know anyone else that's doing this, and this is an extremely unique concept. Let's get to the press release for their second quarter earnings. This is some massive information. They basically restructured their entire business. So I'm going to try and zip through this as fast as I can. Stronghold Digital Mining reports second quarter 2022 results, provides operational update, and reports significant debt restructuring events. So this all revolves around debt restructuring. If you see my previous video, basically what we look at in that video is their current assets and their current liabilities are a nightmare. Their current ratio was 1-to-3. That's a formula for imminent disaster. That's not a long-term problem. That is an immediate problem that gives you the potential to actually run out of liquidity and potentially either file for bankruptcy bankruptcy, go out of business, have to do a liquidation sale, or conversely, really the best case of all these scenarios is find a way to restructure all of your debt so that you can improve your liquidity and get through this. Now, you'll see this came at a great cost. So let's get into it. Okay, this was put out on August 16th. And they had been delaying these results, and it's for this reason. They finally finalized all these agreements. So, NYDIG debt extinguishment. On August 16th, Stronghold entered into an agreement with NYDIG and another participating lender to eliminate all $67.4 million outstanding under the equipment financing agreement with these lenders, and consequently return approximately 26,200 Bitcoin miners, approximately 18,700 of which are currently operating. So that's about 2.5 exahash. These loans were secured by these machines, so they had to return these machines. So this is obviously the ultimate good news, bad news. They got rid of $67 million of debt, most of which was currently due, and they did not have money to pay it. So in a lot of ways, this was a forced liquidation. However, the fact that they were willing to take the machines back means that the machines had the value there so that they didn't default on the loan and have to go into bankruptcy. So they got rid of $67 million of debt with this one move, but ultimately they had to give back a great percentage of their Bitcoin mining machines. So they're down 26,200 machines so far. That's a significant change in their business model. Okay, Whitehawk restructuring. On August 16th, Stronghold received a binding commitment letter from Whitehawk to restructure and expand its current equipment financing agreement into a secured 36-month note, more than doubling the weighted average tenor from 14 to 36 months. This was able to greatly defer a lot of their payments because, like we talked about, their current assets to current liabilities was a disaster. Lastly, they have convertible notes restructuring. On August 16th, Stronghold amended its May 16th convertible notes and warrants to reduce the principal amount outstanding under the note by $11.3 million. In exchange for that, they had to reduce these warrants from an conversion rate of $2.50 to a penny. However, this gets rid of $11.3 million of debt. They reduced their principal amount of debt outstanding by $79 million. That's 55% of the total amount of debt that they had. So that is the type of restructuring they'll need. And you're going to see they had about a $100 million problem, and this solves about $80 million of it. But if we go on, you'll see it's actually even better than that. The total results of this were to reduce cash interest and principal payments through the year-end 2023 by approximately $113 million. So that solves their entire imbalance between their current assets and their current liability. That is the amount of money they were unable to pay. So this restructuring has now put them back into liquidity where they were basically completely illiquid and basically paralyzed. So that is why I did my last video. Something this drastic or more had to happen for this company to continue on and move forward. So then they say, you'll see as of August 12th and pro forma for the agreements with NYDIG, Whitehawk, and the convertible notes, Stronghold has approximately $47 million of liquidity and $64 million of principal amount of debt outstanding. So that's where they land after this restructuring. At the end of the second quarter, June 30th, they had approximately $33 million in cash and $127.9 million in debt. So that is a drastic overhaul. That puts them from a company that is in an imminent danger of not being able to pay their bills to a total restructure. Now, the cost of that was 2.5 exahash. So this is a company that came into the year talking about having 8 exahash operational by December 31st, 2022. You're going to see that is now drastically pulled back. In the middle of the year, they had to issue this press release where they said they were targeting 8 exahash, which you can see right here, and essentially they reduced that to 4.3 exahash. Now they're saying Stronghold's current mining fleet is expected to be approximately 16,000 Bitcoin miners with a hash rate capacity of over 1.4 exahash and total power draw of 50 to 55 megawatts. So obviously this is another massive reduction. Now they are down to 1.4 exahash, and they were originally targeting 8. They dropped that to 4.3. Now they're dropping that to 1.4. However, they now can pay their bills. They now now have a balance sheet that works for them. And to me, it looks like the risk of them going out of business or into bankruptcy has been drastically reduced. So lastly, power assets update. Stronghold owns and operates approximately 165 megawatts of power generation capacity through its Scrubgrass power plant. So you'll see, if you remember, they're going to use about 55 to 65 megawatts for Bitcoin mining. So that leaves 100 megawatts of energy that they can sell. And the energy market is strong right now. So this is going to change what their income statement looks like dramatically. Instead of Bitcoin being their main source of revenue and energy being a secondary source, it's going to flip-flop. Energy is going to be their main source of revenue, and Bitcoin mining is going to be a secondary source. However, they can manage this process now that they have the liquidity to move forward. So I want to look at the charts real quick, because you're going to see, in my opinion, this is still a company that is priced to go out of business. And that's why I bought my initial position in this morning. So this is not financial advice. I'm not telling you to buy this stock or sell this stock. You guys got to do your own due diligence, as you know, and make your own buying decisions. But for me, the risks just shifted completely. So despite the fact that this stock is tanking, I do think it's a better company by far. It's a much more viable company today than it was yesterday. So I want to zoom out. If we look at the chart on the long-term time frame, you're going to see this company peaked in market cap on November 1st, and that was at around $36. They got down to $1.44. I think it was actually $1.46. So that is a 96% decrease in their stock price, a 96% increase in their market cap. So that is a drastic reduction. That is obviously pricing to go out of business. So they have had a nice run up. I'm going to zoom in and show you, number one, they've had a nice run up off the bottom because all the Bitcoin miners are up anywhere between 50% to 250% over the last 6 weeks. So if we zoom in and look, you'll see even after this gigantic pullback the last 2 days, this stock is still up 67% over the last 6 weeks. However, it is still down about 92.5% from its highs back in November of 2021. So a company down 92, close to 93%, that is still a company where the market is pricing in that they are going out of business, in my opinion, and I think the risk profile has changed for the better. They lost a bunch of money on a deposit to one of the companies they were buying miners from that just did not fulfill their contract. That was about a $60 million problem. They're working away at that, but obviously that did not help at all. So this was kind of the perfect storm for them to have everything go wrong and be in a situation where they're just totally illiquid, which is where they were prior to everything that they just did yesterday. So those are the reasons that I'm bullish on this company right now. I am just starting an opening position. I would not at all be surprised to see this company continue to go down in the short term. So for me, this is a long-term play. I like what they've done. I love what this company does. So again, remember, this is an incredibly volatile stock, so please do your own due diligence. This is not financial advice. So that's my update on Stronghold. Thanks so much for watching, and if you made it this far, remember to subscribe to the channel and smash the like button. We'll see you in the next video. Thanks.